Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Wednesday, October 28th, 2020. Um, they say Halloween is the spooky season, and I think it may have arrived early for the markets this week. I guess I didn't even realize I'm wearing an orange sweater, which is sort of seasonally appropriate. But this is one of these days, actually, it's one of these weeks where the market just sort of had a sea change in sentiment. Um, you, my wife took a look at the today, and I have Bloomberg TV on, and they have all the graphics up with the markets, and she just looked in and said, oh my, this is terrible." And she kind of said, what do you think everybody's afraid of?" And my thought was, well, lack of stimulus, over aggressive earnings expectations, the election, its aftermath. Uh, she basically said, "Oh, so you're afraid of everything." And I think that's what the market's doing is occasionally you see these situations um, where the markets, which are trying to always be balancing fear and greed, flip. And I think this week was one of those weeks where we flipped from greed to fear. Now, as bad as this week is, and Monday was nasty, and as it stands now, as I'm taping this, it's worse today. Um, we're really only back to the levels that we saw such as long ago as last month. This is more or less where we were at the end of last month. We've had a good October, but we've given it back for the most part. And this is what happens in markets. This is what happens when they get stretched. Valuations are stretched. And markets had been banking on some market-friendly events, taking them sort of in order. The fiscal stimulus, it became obvious that it wasn't happening, that despite all the talk back and forth between Speaker Pelosi and Treasury Secretary Mnuchin, that they could talk all they want, but Senate Leader McConnell was not going to vote on this stuff. It wasn't going to happen before Election Day. They were getting the Supreme Court justice done and then leaving. And that is what happened on Monday. And that was probably one of the proximate causes of Monday. On top of it, COVID is getting worse in much of the country. Now, in Europe, it's becoming a real problem for the economy because you're starting to talk about shutdowns again. In the US, I don't think there's as much interest in shutting down, although we saw some steps made by Chicago yesterday. I think it's hard to see the situation improving too much if COVID becomes a problem. I'll tell you flat out, going back to my wife, she went to the supermarket yesterday. She said it was pretty hard to find paper towels. And it's not only in Connecticut, because I heard that from a friend in Pennsylvania, and I heard it from an acquaintance in Missouri. So are people starting to react in that sort of behavior? Yeah, and that means, that's a very visceral fear. And so that kind of visceral fear gets its way back into the market. It's hard to be excited about buying stocks when you're starting to get concerned and you're seeing baking goods becoming hard to buy. People are reverting to that behavior that they saw earlier during the height of the COVID. Well, actually, I should say this is the height of the COVID because there's actually more cases now. So that's not good. The election, I think the market's reassessing its feelings toward a blue wave potentially, or just recognizing that it has no idea what's going on. A friend of mine mentioned to me last week, he said, "What happens if Trump wins?" The markets really haven't priced that in, and they're pricing it as no probability, but there's a finite probability, and the markets haven't really dealt with it. Plus the idea of the blue wave. We've been talking about this, that there was the idea that the stimulus would come if you have this blue wave election. Well, what if that doesn't come? What if you get a divided Senate and presidency? What even if it does happen, how long is it going to take to get stimulus out there? Because I can't imagine a lame duck Senate would be any more eager to act than it had been when facing re-election. So all this is coming into play more or less all at once. There's less than a week to go between now and the election. I think smart people kind of realize they don't have a ton of clarity. I also think that's why you see the VIX leaping higher, not just, yes, the markets are going down in big percentage moves. That sort of forces the VIX higher. But I think the market's realizing that a lot can happen between now and the 30-day period that the spot VIX encompasses. We're now seeing a fully backwardated yield curve, VIX curve, which we hadn't seen in a while. So all this is coming into play right now. Again, bear in mind that we are more or less back to where we were a month ago. And I've said this I say this each time that the market falls, but and I hope my message comes through. Take a gut check today. If this week really bothers you, then you probably have carrying too much risk, especially with earnings season, especially with tomorrow sort of being the mother of all earnings days. But if you're carrying, if this kind of drawdown bothers you, you're carrying too much risk. If this kind of drawdown doesn't bother you and you're thinking about it with a clear head and saying, okay, these are winners, these are losers, these are buying opportunities, these are things I should be ditching, well, then you're probably appropriately risked for the markets right now. That's not necessarily making a call. It's really a gut check. If you can't handle going back to a level that we last saw a few weeks ago, then you're over risked. So think about that as we go through today. It's going to be, we have the potential for some really rocky trading days between now and next week. And really, you should take your best risk assessment when you can. Have a good one, everybody. Bye-bye.